Hey guys, Matt Langlo again with Denver Private Wealth Management. In this ever-changing investment landscape, one of the old staples of an investment portfolio used to be your bonds, and specifically the treasuries or the government-backed bonds that were provided ballast and were incredibly stable, and we could trust to get a strong yield or percentage off of that in a stable manner to help fund our lifestyle, specifically in retirement, but also as the more stable portion of our portfolio, so we can go take more risk in other areas such as our equity exposure and things of that nature. Unfortunately, what we've seen over the last decade or so, and it's been exacerbated in 2020, is the treasury, the yield on the treasury, which since 1962 on average has been about 6%, believe it or not, is at 0.65%, or within the finance world we call it 65 basis points. And so with that, a large part of our portfolio that we used to count on to give us that income in a stable manner no longer is there. And the problem comes in, you now have two options. Do you go look at more risky investments to make up the difference? Or do you have to appreciate that a conservative portfolio is now going to have a lower return? At Denver Private Wealth Management, one of the things we do is a search for yield. And that's going to be looking at risk-adjusted returns. And there's a ratio out there called the Sharpe ratio that helps calculate the level of return you are generating for the level of risk that you're taking on and assuming. And specifically where private placement real estate can fit into your portfolio to still tampen down the volatility, which is what your bonds used to do for you, your treasuries used to do for you, while still getting a higher level of return. Now, there's a couple reasons why that is, and we recently wrote an article that'll speak to it. But some of it is that the private placement of real estate, privately owned real estate, isn't subject to the whims of the publicly traded stock markets. We've even seen in 2020, back in March, we saw publicly traded companies, lose 20, 30% of their market value in a matter of weeks. With private real estate, since there isn't that ticker assigned to the property, we don't see it have to fluctuate quite as much, and we can just take the income off of it and tampen down that volatility over time. It's incredibly important to be working with someone that can understand how these private real estate funds operate and how the deal flow works, because not all private real estate is created equal. Not all opportunities to invest into private real estate are created equal. Just yet another way that Denver Private Wealth Management is trying to evolve with the times and make sure that we are doing the best possible for our clients so that they can get the highest level of return while still being able to sleep well at night and be able to achieve their goals. Because that's the real point of all of the investments and rate of return is that money helps us do the other things that we want to do in life. So if you'd like to learn more about how this may fit into your personal portfolio, please give us a call. We'd love to discuss. Thank you.